My name's Alan Carter. I'm the President and CEO of Cabral Gold. Cabral Gold has an advanced exploration project in northern Brazil. We already have 2 gold deposits that currently total 1 million ounces. That was based on approximately 29,000 meters of drilling that was done up to 2018. Since then, we've drilled another 27,000 meters. We're planning another 25,000 meters during 2022, and we have 5 rigs turning.
Alan, good to see you again. We're going to see a bit more of you, actually. We've had a little chat off screen. I'm liking some of the press releases which are coming out. I'm liking the numbers more. So we're maybe going to have a little monthly catch up, and as you kind of progress through the phases, as it were, and we'll see how you get on. But today, let's just talk about some of the grades that you're starting to see, because we've talked about the strategy. It might be worth reminding people of the strategy. In fact, let's start there. Let's start with the strategy in terms of these blankets versus the kind of the larger discoveries.
Well, Matt, we have a district scale play. So surrounding the 2 deposits that I mentioned that we knew about back in 2018, we've got 43 targets at various stages. And in the last 18 months or so, we've made 5 new discoveries. Now, 3 of those are oxide blankets, as you just mentioned, and 2 of those are hard rock zones. None of those 5 things have resources on them yet. We're aiming to update the resource. Obviously, the resource won't be updated on just the 2 deposits we knew about in 2018. It will also have resources on these new discovery zones. So that should occur later on this year. So the main focus for us really is to define high grade zones within the 2 existing deposits and in the new discovery zones. But in the process of doing that, we have had a very nice surprise in that we found 3 oxide blankets in unconsolidated material, which is free digging at surface. And some of these blankets are up to 50, 60 meters thick. So, the mining cost for this oxide material and mining and processing should be extremely cheap.
Well, that's the bit that kind of interests me in terms of the strategy you're employing here, because the oxide it's kind of low capex. It is relatively low grade, but it throws off awful lot of cash in the near term, which allows you to subsidize or contribute towards the capex required for the higher grade stuff under that. So I think that's interesting. But can we just talk about those, because the MGM zone, for instance, you're seeing a little higher grade zone there, are you?
Yeah, look, there's 2 things. The MG gold deposit that we knew about in 2018 is essentially a hard rock gold deposit. We now know there's one of these extensive oxide blankets sitting right on top of it. As I said, we don't have a resource for that blanket, but all that blanket material, which is in mud, sand, and soil, was assumed back in 2018 to be waste. It was material that we'd have had to strip off to get to the underlying ore body. Actually, that waste is not waste, it's ore. It contains gold, and obviously that's something that we would have had to have mined anyway, and it would have gone to a waste pile. What we're doing now with this oxide material is we're doing metallurgical test work on the possibility of heap leaching it. Obviously, as I said earlier, the mining cost on that material, because there's no drilling and blasting required, would be very, very cheap. And that flows through into the processing. So instead of having to, crush and grind hard rock material, it'll be we won't have to do that. It'll be more of a case, particularly if it is amenable to heap leach, and we'll have those heap leach column leach test results in May this year. It will be a case of mining it with shovels and trucking it to a leach pad, agglomerating it with the cement, and basically putting it on a big leach pad, which of course capital cost for that is a fraction of what you would normally expect on a large open pit hard rock operation with a crush, grind, and all the rest of it.
Okay, and what's happening at PDM? I'm just kind of romping through the blankets here at the moment, because
well, the PDM area is about 5-6 kilometers to the northwest of the MG deposit. We had a blanket, as you know, last time we spoke, we mentioned that we've got the second oxide blanket there. The interesting thing about that oxide blanket is we didn't know if there was an underlying deposit underneath it in the hard rock, in the granitic rocks underneath. But based on MG, it was highly suspicious, because the gold in the oxide blanket is obviously weathering from somewhere. And in December, we found the underlying zone. We drilled 22.4 meters at 4.8 grams a ton in the hard rock granite underneath that blanket. And by the way, that was 110 meters below surface. And the trenches on surface are averaging 15 meters at 4 grams. So it looks like there's vertical continuity. We've just stepped out 120 meters and drilled another hole into the granite underneath the blanket further north. And again, we cut 12 meters over 3 grams. So there's a very nice zone emerging there, and it's on trend from the central gold deposit. So we don't know. It's 2.5 kilometers to the northwest. There's a very strong gold anomaly, which is 5 kilometers long, which encompasses the central gold deposit and this new PDM area you just mentioned. So the goodness knows how big that trend is going to get. But we've got a lot more drilling to do. It's tremendously exciting.
Okay, and this is kind of getting to the point. And we'll talk about Central. You mentioned Central there, and maybe you can talk about Central in the context of my next question, which is when small explorers, juniors come on here and they start talking about district-wide potential, I get a little bit nervous because it's not necessarily a positive because you've got to fund it. I actually look at it as a liability, right? Yeah. So in terms of the picture that you're trying to paint, how does all this come together? Because where are we? 60 million market cap today, right? And you've been able to raise money when you need to. The results look good. I kind of understand that, but it can either take an extraordinarily long time to develop a district, or you have a plan and you need to share that plan, with shareholders and the market. So what is the picture that you're painting? And you're obviously seeing a lot more with the drilling that you're seeing at the moment. And I notice a 5th rig going in there as well. So how do you explain that? How do you explain that?
Excellent question. Excellent question, Matt. I mean, there's no doubt that the Cuiú Cuiú has multi-million ounce potential. It has a massive footprint. It was the largest area of placer workings during the Tapajós gold rush. And the Tapajós gold rush is the largest ever recorded gold rush anywhere on the planet. So the area that we've got is very special. But the point's well made. With so many different targets, how do we decide which of these targets are ultimately going to prove up to be deposits? And how do we present ourselves from sort of like, going on and on year after year after year, exploring. Well, the identification of these oxide material really gives us an opportunity to jump off that hamster wheel. And the opportunity it presents us is because this material is at surface in unconsolidated material. The capital cost for this type of, for mining and processing this type of material is likely to be a fraction of what it would be if we were dealing with a hard rock deposit. Now, we've got lots of gold in the underlying hard rock material as well, but the oxide material, particularly if it is amenable to heap leach, and as I said, we won't have those column leach test results until May of this year, so it's about probably another 6 to 8 weeks. But if it is amenable to heap leach, then it allows us to get into production very, very quickly at a fraction of the copper capital cost, and the operating cost also should be very, very low. Essentially, Matt, because this material is soft, and you and I could go down with shovels tomorrow and start mining this stuff. We don't need drills and blasting equipment. So, it's very unusual. We've got a lot of this oxide material, and it gives us that ability to get in production very quickly.
It does, and I understand that, and that's what's drawing me to what you're now doing and you're now talking about. But it comes back to that question: district-wide potential. That's a big area we're dealing with here. I know you've got G Mining to the south. They've been on a few times. They've potentially, I think they're talking about being the Brazil's 3rd largest gold producer. But they've got access to capital. They're ably supported by their G Mining company. They've got access to big institutional funds, etc. And they're sort of well on their way, right? They're building a mine. You aren't there yet. So in terms of your land package and how you move that forward, I mean, what can you tell us about the way that the process that you're going to have to engage in to kind of move this project forward?
Well, our project is quite different to theirs, and maybe what I should do is show you a map here.
Okay.
This is I don't know. Can you see this?
Yes, we can.
Okay, so this is our map, and so Cabral's land holdings here in pink, and G Mining's land holdings in blue. That smaller ellipse in the blue area is the TZ project that you just mentioned. That's the project that G Mining acquired from Eldorado Gold in October of last year. It's a 2 million ounce gold deposit. They're moving forward with the development of this project. It will be approximately a $450 million initial capex on this. They've just released the updated feasibility study. They're ordering long lead items. that is going to be Brazil's third largest gold mine that will knock out about 225,000 ounces at its peak. Now, what this slide demonstrates is that we're about 25 kilometers away. Our claims are contiguous with theirs. All these yellow spidery lines here are the areas where gold was produced by informal miners during the 1980s. So back in the 1980s, there were lots of informal miners in this whole area. They produced an estimated 200,000 ounces from the streams at TZ. Cuiú Cuiú, by contrast, the informal miners here produced 2 million ounces of gold. The historic footprint in terms of the placer production that mined during the gold rush at Cuiú Cuiú is 10 times larger than TZ. Now, besides the size of the footprint, there are some other important differences. The other big difference is that, as you mentioned, ours is a district scale play. Eldorado owned TZ for 11 years and did not add a single ounce to the resource. They got it fully permitted, they advanced it, they got a feasibility study done. But the best drill result they had outside of TZ in 11 years of drilling, and that is in the rest of this blue area, was 20 meters at 1.73. Now, I'm going to show you the drill results that we're getting outside the two known deposits that we had up until 2018. Let's just have a look at some of the drill results. Now, bear in mind that their best result outside TZ, as I just said, was 20 meters at 1.73. This is zooming in on that big ellipse area. The beautiful rainbow colors here it's basically mapping magnetic data. Now, magnetic data is very interesting for picking out geological structure, but ignore the background colors for the moment. The two deposits that I mentioned that were just dots, let's just go back to these two, Central and MG. This is Central, and this is MG. You can just about make out the yellow outlines of the ore bodies here. That new discovery we've got at Powder Merenda, I mentioned, is 2.5 kilometers away, is just up here, 2.5 kilometers. You can see there's very little drilling drilled between this new discovery at Powder Merenda and Central. So who knows if actually the Central deposit extends all the way up to Powder Merenda. If it does, it's going to get very large. We're excited about Powder Merenda on its own. But look, all these yellow dots are targets that exist around the two known deposits. Right, I mentioned Powder Merenda, Mashishi we can talk about because that's also very exciting. We've definitely got a new zone at Mashishi here. But look at some of these drill results, Matt. Again, G Mining, Eldorado, that best result outside TZ is 20 meters at 1.7 grams. So down here, for example, Central Southeast, we have, and this is 500 meters away, we've got 4 or 5 holes down here, 27 meters at 6.9 grams a ton gold. Right up here at Jacema, this is another target up here where we've got a little bit of drilling. I'll get my mouse to work in a moment. 39 meters at 5 grams. Mashishi itself, 34 meters at 5.3 grams. Mashishi Southwest. All these drill results, by the way, are outside the resource estimate right now. 3.4 meters at 36.9 grams. Right? I mean, there are a lot, there's not just 1 or 2 targets here that have extremely high values outside the two known deposits. There's a whole collection, quite a significant number of targets here which have very good drill results. So it is district scale. But like I said, getting back to your original question is, how do you figure out which of these targets is ultimately going to be another deposit? We've got, as I said, very good indications now from the drilling that we're onto something at Powder Merenda, which is shaping up continuity of grade. Same thing at Mashishi. And the oxide blankets that we've got on top of MG, on top of Central now, and at Powder Merenda, and there are probably others, really give us that opportunity. Unlike most gold deposits around the world, they don't have these oxide caps. If they do, you should look at them as an investor very hard because, as I said, getting back to my original point, the cost of mining and processing oxide material when it's in unconsolidated soil, mud, and sand is very, very cheap and can be extremely profitable. So on the oxide blankets themselves, the steps now for us over the next 9 months towards the end of this year are get the column leach test back in May. If those are positive, we'll do a scoping study just on the oxide material to figure out what the capital costs are, what the operating costs are, et cetera, et cetera. Scoping study, second, third quarter. And then we could be looking at project financing as early as the fourth quarter of this year on the oxide material. And obviously, as I said, the oxide material could be extremely profitable and could give us significant cash flow to then go and self-fund the exploration of the rest of this district, and probably put quite a bit of money in the bank as well.
Okay, that's great. And we sort of talked about that last time round. So that model, totally understood. I like it. Just talk to me about the rig, because you announced the 5th rig turning. So what are the different rigs doing in terms of working towards the goal of getting some sort of economics on the blanket, and in terms of other making discoveries? Because that's the name of the game here. That there's a game changer moments. So maybe just kind of run through the plan on the drilling.
Well, look, the priority number one is really to define high-grade zones of high-grade mineralization within the underlying hard rock deposits here. That is priority number one. We have 3 rigs basically addressing that objective. So 3 diamond rigs. There's one at Central, which is defining a very nice high-grade zone at Central. MG, we're more advanced. We now have a high-grade zone in the middle of a low-grade ore body at MG. That high-grade zone is now 285 meters long in terms of strike. It's open down dip and open at both ends. And then the 3rd rig right now is drilling at PDM on that new discovery underneath the blanket. The 4th rig is an RC rig, which is drilling off the central blanket. And the 5th rig that we've just brought in is actually a small reconnaissance diamond rig. So we've now got 4 diamond rigs running and 1 RC rig. The reconnaissance diamond rig is really to test some of these other regional targets that we haven't even talked about, where we've got high-grade boulders on surface. So we're going to be testing some of these other things in the district.
Okay, so busy. Well, look, I don't want to make this a long one. I just wanted a nice short punchy update from you, which we're going to do on a monthly basis, because I'm starting to like what I see here, and I think going into I think it'll be quite a bullish gold market this year. Of that, I'm certain. Thanks for today. We'll see you next month.
Thank you very much, Matt.